Hey guys, welcome back. I hope you've been doing great and Happy New Year to you all. In our previous video, we talked about how you can use supply and demand zones and add a confluence of key levels or Fibonacci retracement tool in order to increase the winning probability of your supply and demand trading. Now in this video specifically, I want to focus on the SR flip level or support and resistance flip levels, and I'm going to show you how you can add the confluence of supply and demand zones and also the candlestick patterns in your SR flip level strategy in order to increase the winning probability of your SR flip levels. So without any further ado, let's get started. First of all, the thing that we need to understand is what are SR flip levels in Forex. Now, if you're already familiar with the support and resistance levels, the resistance level is any level from which the price gets rejected in the bearish direction. So let's say if the price is going upward and then it bounces back from here multiple times from this level, then this level will act as resistance because it is resisting the price and it is resisting it from going upward. So from here, this level is acting as a resistance level. Now, if the price comes down and gets bounced in the bullish direction from a certain level, that level will be called as a support level. As you can see here, from this level the market is getting rejected in the upward direction, so this will act as support level. Now what are SR flip levels? As I just told you about the resistance and support levels, SR flip level is a level from which the market turns a resistance into support. So any level where our resistance turns into support or support turns into resistance, that level will be called as SR flip level. Now let's talk about how you can detect the SR flip levels, because it's a little bit different than detecting a simple resistance level or a simple support level. In order to detect the SR flip level, what you need to do is pay attention to the wicks of the candles. So if there are a lot of wicks at a certain level, then that means that that level is very important, because at that level price is not staying, and because the wicks or the shadows represent the price rejection from a certain level. So whenever there is the formation of wicks at a certain level, that means that the price is not staying at those levels and there is a lot of price action happening. So those level will become our key level, and those levels will be called as SR flip level. As you can see here, from this level the market is getting rejected multiple times, and after that, with this bullish candle, this level breaks and this resistance turns into support. Now again, there is a lot of formation of these wicks at this level, so this level is now acting as a support, and after some time with this big bearish candle, this support level turns into a resistance level again, and then here you can see again the formation of these big wicks or big shadows. So because of the formation of these rejections and these big shadows, we have understood that there is a lot of price action going on at this level. So this level will be a key level, and this level will be called as SR flip level. Now that you understand how you can detect the SR flip level, let's talk about how you can trade the SR flip level. So right now I am at 2 hours time frame at AUD CAD chart, and here you can see that after drawing this SR flip level, we can go towards lower time frames in order to trade this. So let's say if we go towards the 10-minute time frame, and since we have already drawn the level from this here, okay, so from here if we zoom in a little bit, we can see that at this level, since this level was drawn at 2-hour time frame, now we are at lower time frame. So after detecting this level, after detecting this SR flip level, we can go towards lower time frames to find any confluence that we can add. So in this case here, we can see the confluence of base drop supply zone, and also this level is acting as a resistance for now. So now both the supply zone and the resistance is at the same level. So both of these complement each other, because the resistance psychology says that whenever the price comes back to this level, it will get rejected, and the supply zone psychology says that whenever there is a formation of supply zone, there will be a lot of big institutional orders and those will be the short orders or sell orders. So whenever the price comes to this supply zone, the market will pick those pending orders and move impulsively in the bearish direction. So if I just go ahead and draw the supply zone, let me just go here, and if I draw the supply zone from this high to this low, and if I extend it, we can see that this supply zone and this resistance zone is forming at the same level. Now, after the formation of this supply zone, the market comes back in order to pick the pending orders. As you can see here on this candle, the market picked the pending orders and then it goes in the bullish direction, as we can see here. Okay, so with the addition of supply zone to this SR flip level, we were able to take a successful trade. That shows us that after coming to this level, the price gets rejected in the bearish direction. By the way, you can also use our supply and demand indicator to automatically detect and show you the supply and demand zones on the charts. If you're interested, please check the links in the description, and the indicator also has an alert feature which will notify you in real time whenever there is the formation of a supply or demand zone on the chart. Now let's talk about how you can take trades using the SR flip levels. And if I go here, we can see that there is the formation of this inside bar candlestick pattern. As you can see, there is this candle, and then before that, this candle is totally engulfing this candle. So this is an inside bar candle, and inside bar candle represents the indecision phase in the market. So whenever there is formation of an inside bar, then buyers and sellers are kind of struggling to take control. But with the breakout of next candle, we can see that finally sellers were able to take control of the market, and after the formation of this big bearish candle, the sellers have the momentum at the end. So now what do we see here is that there's this SR flip level, and also at this same level we have the formation of inside bar. So if we trade this inside bar and take our trade from here, so let me just go ahead and take a short position. So if I put my stop loss here, my entry at the close here, close of this candle. So then we can see the market going in the bearish direction for a very long time, as you can see here. So with the combination of SR flip levels and this inside bar candlestick pattern, we were able to combine these two into one analysis and get a trade that worked out very well in our favor. So this is how you can combine multiple analyses in order to form a strategy that will be better than if you were trading that single analysis. For example, in our case here, we combined SR flip level with a supply zone and also SR flip level with a candlestick pattern. So I hope you were able to understand how the confluences work and how you can combine multiple analysis in order to form a very good trading strategy. If you have any questions, please comment down below and I would love to answer them. Also, don't forget to like, share and subscribe. See you guys in the next video. Thank you.